Change for the poor. Change for the poor. I took Oscar's trades yesterday, and now poor Timmy can't get that leg operation. Mom's going to have to send back the dialysis machine. Change for the poor. Change for the poor. Oh, wait a minute. Wait a minute. They're throwing change at me, but you know what? I don't need this sign. I don't need the change. I don't even need to trade these cans in for money because I have technical analysis. And technical analysis is what we gauge our trades on every day. Welcome, traders, to another edition of Short-Term Trading Live with Oscar. Yes, traders, I know, we got our heads handed to us yesterday. That's what the sign's all about. Hey, I could use that change after yesterday's trading. However, hey, look, traders, that's part of the trade, right? We're not always going to get it right every day. And you know at the Emini Trading Academy, we're pretty darn good at getting it right. Well, boy, oh boy, did they tattoo me yesterday. Wednesday, traders, we came in the morning, we bought them early. We bought them at like 12.10 down to 12.02. It rallied back up to 12.13. We sold them back out. Some of us sold them out, some of us stayed with them. That trade I'm going to count as a loser. Whether you got out break even or not, I counted that one as a loser. Then I get brave and the market rallies all the way from 1160. It runs up maybe 1163, runs all the way into the 1180s. I tell the Omniacs, we all jump in, we get short in the 1180s. We put our stop in, the market runs up, it goes tink, 1194. The high tick of the afternoon hits our stops and drops $37 down in our direction with all of us choking. We had our stops hit. I was like a babe in the woods yesterday, traders. They caught me, but you know what? My dukes are always up, baby. I'm coming back at you tomorrow, and I'm getting my money back. And you Omniacs are going to get it back, too. You just stay in tune, stay at the site, keep those dukes up, and make sure you don't get afraid. We only had one bad day, traders. September's been one of the best months we've had the whole time we've been here at the Emini Trading Academy. So one bad day is nothing. All you traders know that. So remember, keep those dukes up, all right? Now, look, we got some stuff for tomorrow. I'm going to start off with the neutral Omni. I know where I want to get in. I know where I want to get out, but we'll start off with the neutral Omni. And we're going to show you some charts now that are going to illustrate where we're going, why we're going there, and what happened last time we had the same formations so that maybe you will be more secure with the move coming forward. Traders, with no further ado, let's show you some charts. Okay, traders, what you are looking at is the Dow Jones Industrial Average daily bar chart dating back to the month of September of 2007. And we can show you here there was a big head and shoulders. We made a projection off that head and shoulders. The market broke down, almost touched it, picture perfect. It was almost a perfect projection. Then we put in another head and shoulders where we are right now. I would like to blow this chart up for you, so I'm going to show you a few more charts now. We'll break out this one, we'll break out this one, and we'll take a look at where we're going from here. Okay, traders, what you are looking at is the Dow Jones Industrial Average, that little head and shoulders that was sitting over here. I've moved it over for you now so you can see it clearly. Back in August through December of last year, 2007, we did so many videos about this. We said head and shoulders, here it comes. I even held up a bottle of head and shoulders in a video, and I said this market is dandruff, and I pointed to everybody how this was going to give us this. I did a projection on that. That projection came out to be almost perfect. That was that first one that topped off the market, traders. Now, we've been hemming and hawing about this other one that's been all over the map. And here it is. I'm going to blow that one up for you now. So look at this next chart. Okay, traders, this is the very same chart now. We've moved over to the head and shoulders that exists today. This is where we are in today's action. Traders, I've talked about this so often that I've had my Omniacs going, oh no, not another head and shoulders lesson. However, we have no choice but to keep pointing out these lessons to you because look what's happening now. We are breaking down out of that massive head and shoulders just like we did on that one to the left over here. And we have projections that take us at least as low as 9,900 on the Dow, traders. Take a look at this for yourselves.
This shows up on many other charts, and I will show you some of those charts now, but head and shoulders projections and formations really do work well, traders. Again, this isn't new. We've been talking about this for so many weeks on end. I didn't even want to hear myself say it anymore. But here we are breaking down severely now. As you've seen in the last few days, the panic is hitting the marketplace, and we are heading down to a whole new trading level. Let's look at a few more charts here. Okay, traders, interestingly enough, now you are looking at the same chart, only a weekly bar chart of the Dow Jones Industrial Average. On the weekly, you also have that well-defined head and shoulders. The projection on the weekly comes out to about the same spot as the projection on the daily out of the head and shoulders. And look at us, we have broken out of that head and shoulders already, and we are on our way down, traders. I've been saying don't fall in love with the upside. Many traders in the world have been writing to me telling me I don't know what I'm talking about, and I stick to the analysis, I stick to my guns, and there it is, traders. It is happening as we've been predicting and trying to get you Omniacs ready for this move. Granted, they stopped us out as we got short for it yesterday, but we got a lot more of this move coming, and I assure you we're going to catch a big piece of it. We'll do our best anyway to try, but now that we know that we're out of that head and shoulders and the projection is taking place, I think we can just sell rallies every time we see them now and just let this thing continue to bake on the downside. Now I want to show you a few more charts. That's the Dow Jones Industrial Average, right? Let's go look at a few more charts that are involved with and, of course, wrapped around the Dow Jones Industrial Average and see what they look like at this point in time. Traders, cash S&P daily bar updated right until today. You have the Dow Jones head and shoulders. You have the S&P head and shoulders. The breakdown is happening now. The projections are way down here. We expect to go much, much lower in this market as the weeks ahead start to show us. I would imagine, of course, there'll be some rallies on the way down, but basically this formation, just like the one that was off here on the left, is the one that knocked us down. This one is going to knock us down to a new trading level. It's also on the Nasdaq. It's all over the map, traders. Let's go look at another chart now. Just remember the head and shoulders, when you see it, just expect it to come your way because they almost always do. Okay, traders, this is a really good lesson now on a head and shoulders formation. You are looking at the Canadian dollar December daily bar. Here's a chart I've been showing to my Omniacs at the site and during classes for weeks on end. We talked about the head and shoulders formation. We talked also about this. Here's the good part of this lesson. Many times in a head and shoulders formation, you'll come out of the right shoulder, you'll rally up and test the middle of the head. Here's the head. You test about the middle of the head like we did here, and then if it fails, you get a major breakdown. That's what happened in Canadian dollar. Now it's put in another head and shoulders formation. But the lesson in here is this. You get the head and shoulders formation. You get that rally to test the middle of the head. If, in fact, that rally fails, you get a really big down move in a market that has a well-defined head and shoulders. That's Canadian dollar, right? Watch the chart that's right behind this, traders. Traders, the Canadian dollar did it first. I also pointed this out in many lessons to my Omniacs at the site. And look at this, traders. Nasdaq daily bar, head and shoulders formation. What does it do? It pops out of the right shoulder. It goes right about to the middle of the head, fails, and has a big breakdown to where we are today. That projection is much lower than where we are today. In fact, we just started to take out previous lows, traders, and we settled below them. Now we are in track for much more downside. If a rally occurs, you sell the rallies if they come and expect more downside, traders. Do your own homework. Take a look at this for yourselves. The head and shoulders formation is formed. You come out of the right shoulder. You test the middle of the head. If you fail on that test, the big breakdown will come your way. Traders, do your own homework. Take a look at the Nasdaq, look at the Dow, look at the Dow Jones Transports, look at the S&P, look at the Emini Russell. You will see nothing but formations pointing towards the downside. So, you see those charts, traders? You see those head and shoulders? Look, I know I've been hemming and hawing about this for months on end, but you gotta trade what you see, right? Not what you hope for. You hope for the upside. AIG's been bailed out. None of that is going to get the market to do other than what it wants to do technically. Now, you've seen that. You've heard me yell about it. You've seen the videos with the head and shoulders. The market's got dandruff. Well, that worked at the top of the market, right? This one is working as well, traders. It is a good lesson, especially that lesson I showed you with the Canadian dollar and then the Nasdaq, the head and shoulders formation, the test of the middle of the head, and then the breakdown. Very good lesson. Look for that yourselves. All right, traders, there's more. Huge head and shoulders. We talked about that, right? Outside reversals. Now, let's talk about that. In the S&P and the Nasdaq, we have what we like to call outside reversals towards the downside set since Wednesday's trading. Take a look at this right here on the board. Here's an average day in a market, right? If the next day you have a market that opens, runs up, puts in a higher high than the previous day, runs down, puts in a lower low than the previous day, and settles lower, that is called an outside reversal day down. We have that in NASDAQ. We have that in S&P. In fact, it's in many of the indice markets. Take a look for yourselves. Usually what comes with an outside reversal are 2 more down days to follow. Tomorrow being Thursday, or today, let's say, is for Thursday and Friday. We can easily get this action in the next 2 days, so be prepared for that. The next thing I want to talk to you about is forced margin liquidation, traders. We've had hundreds and hundreds and hundreds of points ripped out of the Dow in the last few days. Many, many brokers are going to be on the phone tomorrow morning calling their customers going, what would you like to do? Do you want to send more money to hold your positions, or would you like to liquidate? And most traders at this point in time are going to say, please liquidate my position for me and get me into cash. And that's going to push us down even further. That will probably happen right out of the chute tomorrow. Usually the first couple of hours of forced margin liquidation, so look for that to come your way. Tomorrow is Thursday, 9/18/08. Traders, come to the site. It's www.livewithoscar.com. We absolutely have a trading plan. We will stick to that plan, and we will do what we normally do, and that's get in and out of these markets and hopefully safely. What we always do, however, is we always have stops in, and they almost always save us from a disaster. Albeit yesterday the stop was just a little bit too close. They tagged us before the drop, but I'd still put that stop in. I'd put it in first, and I would never trade without a stop, because on most occasions, traders, a stop is your best friend. So I don't want anybody at my site tomorrow thinking, I'm not putting my stop in because it got me tagged yesterday. Traders, let's flip the situation around, okay? Let's say you bought them on Wednesday and you didn't have a stop in. When we got stopped out at 1194, it dropped 37 full points like that. Imagine if you were long and didn't have your stop in. We took our lumps and we were out of it at least. If we were long and that thing dropped 37 points, I mean, could you imagine being caught in something like that? So put your stops in. Now, I will say this. Congratulations to a lot of you Omniacs. And there were many of you that wrote and said, Oscar, I scored big on that trade. Thank you so much. Because their stops were up at $11.97. $3 away from where I thought the stop should be. And a lot of you guys scored yesterday. So the trade was good. The analysis was good. My stop was just a little too tight for the volatility. But remember, the analysis is still pointing in the proper direction because the market did, in fact, go and make new lows, which is what we thought would happen. So again, to you traders that stayed in and had your stops wide, you certainly did better than I did yesterday. You took my trade, you did well with it. I took my trade, got hammered. But that's how it works. All right, traders, so remember, do your analysis. Don't worry about a losing day. If you were part of a losing day yesterday, it's okay, baby. We have them from time to time. You keep those dukes up, you keep trading, and you'll see we'll be just fine. So remember, For tomorrow, you have the outside reversals. You will likely get forced margin liquidation. And don't panic. There's a world of people out there panicking right now. Traders, you've sat with me and you watched me do a whole wealth of analysis this week. In fact, I did classes and I showed you in a class just yesterday, before the Fed was going to do anything, I showed everybody how within the charts, I can show you that the Fed is no way going to cut rates. And I broke out a bunch of charts and I showed them to all the Omniacs at the site. And I showed them, look, this means no rate cut. I was adamant about it. And you know what? End of the day comes and there was no rate cut. That came right from the charts, traders, right off the analysis. And I kid you not, you listened to the TV yesterday, talking heads, 80% of the world expected at least a 50 basis points rate cut. Technical analysis told us, not a chance, it's not happening. I made that clear last week, the beginning of this week. I made it clear all day Tuesday leading up to the meeting. And lo and behold, there was no cut. So make sure you do your analysis because boy, oh boy, on most days, analysis can really help you get this right. All right, traders, tomorrow is Thursday. We're going to have another rough and tumble day. Make sure you put your stops in really wide because you're going to need them with this crazy volatility. Don't forget the forced margin liquidation, the outside reversals, and the huge head and shoulders that is now finally taking effect on the markets. All right, traders, I hope these videos are helping you with your trading. If you're not sure how to do analysis, if you'd like to come join us and don't trade alone, come on down to the Omni Trading Academy. It's www.livewithoscar.com. Grab yourselves a free membership. Jump into our trading chat rooms and let us help you as a crowd with unity to get through these markets. All right, traders, as always, please call me anytime, day or night, 702-629-4755. And please keep those emails coming to Oscar@futuresanalysts.com. Traders who've been watching my YouTube videos, thank you so much for your comments. Thank you so much for your undying support. Thank you for posting comments on the YouTube videos. The beauty of the comments is that you're gearing them towards helping other traders of the world out there. I don't want you to tell me whether I did right, wrong, indifferent. I don't want praise. It's not what I do this for. I do this to help you traders out there. There are so many of you that need help. You traders know me well enough. I am here to help you. We give you honest to goodness analysis. We show you exactly what we think markets will do based on 27 or just about now 27 years of practicing at this, traders. I am no kid at this. I am no new guy on the block. I've been doing this my entire life. I eat, drink, and sleep analysis. And you Omniacs that come to the site, you are well aware of that. So one more round of applause for all the Omniacs that support us. Thank you so much. All right, traders, I'll see you in the rooms tomorrow. Make sure you're there. In fact, I'm walking out of here and I'm going into the chat rooms right now where you know you always find me. Keep your powder dry. Keep your emotions out of trading. One of the best ways I can help you with that is to tell you to say to yourself, oh, wait a minute, I can't even get this out. I had such a bad day today. One of the best things I can do is tell you to say this to yourselves every morning, afternoon, and evening, and you know what that is? Stops are in. Emotions are out.
Change for the poor. Change for the poor.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.